So right at the start of the new year, Indian stock markets are absolutely on a tear, hitting one all-time high after another. On the surface, it looks like a massive party for investors, but if you kind of peel back the layers, the real economy is telling a completely different, much quieter story. So what's really going on here?
Just look at that number. In the very first week of 2026, India's key benchmark, the Nifty 50, just blew past all its previous records to hit 26,328. And we're not just talking about a small jump here. This is a huge psychological milestone for the market.
Yeah, for anyone invested, a moment like this, it's pretty much the ultimate validation.
But, and this is the big but, it brings us right to the core question of this whole explainer. Is all this optimism getting a little ahead of the reality on the ground? Is the party truly justified by what's actually happening in the economy?
Okay, so to really get what's going on, we first have to appreciate the sheer scale of this rally. This isn't just about the big, flashy index you see on the news. The gains are actually pretty widespread.
And you can see just how broad-based those gains were. While the main Nifty 50 and Sensex saw solid growth, what's really interesting is that Nifty Midcap 100, these are the medium-sized companies, and they actually outperformed the biggest players, jumping 1.7%. What that tells you is that this positive feeling is trickling down through different layers of the market.
So, what's actually pushing the market this high? Well, it's not just, random optimism. There are some very specific engines firing on all cylinders to make this happen. This chart tells a huge part of the story, because the rally, it's not uniform at all. I mean, just look at the massive outperformance here. The metal index surged an incredible 5.7%, and the public sector bank index jumped 5.0%, both of them just completely dwarfing the broader market's gain.
So why the huge jump in those specific areas? Well, for metals, it was a direct government action. New duties on steel imports gave local companies a big leg up. For banks and auto companies, the fuel was pure hope, the hope that India's central bank is going to cut interest rates soon, making loans cheaper and driving up sales. And on top of all that, you just got big money, both from India and from overseas, pouring into the market.
And that term, rate sensitive, well, it's absolutely key to understanding what's going on. See, when investors even think interest rates might fall, they start buying up stocks like banks. So why is that? Because lower rates mean banks can borrow money for cheaper, and it gets more people and businesses to take out loans. It's a direct boost to their bottom line. Simple as that.
Okay, so the stock market is cheering for rate cuts, right? But if you look over at the dashboard for the real economy, well, it's flashing some pretty serious warning lights. And this is where the whole story gets a lot more complicated.
Take a look at this number, this right here. This is India's industrial production growth from late last year, 0.4%. That's it. I mean, that's practically standing still. It shows a real weakness in the core engines of the economy, things like manufacturing and mining.
Now, let's just put that in perspective for a second. In a single week, the stock market grew by 1.1%. In an entire month, the country's industrial engine grew by less than half that amount. And that right there, that is the disconnect. That's the whole paradox in a single slide. You've got the market's hopes and dreams moving one way, and the economy's reality moving in a completely different one.
And here's another warning sign. The Indian rupee is getting weaker, trading near a record low against the US dollar. Now, a weaker currency can be a signal of economic stress. Plus, it has a real-world effect. It makes everything the country buys from overseas more expensive. And that weak industrial number? It wasn't just a fluke. It was a sharp drop from over 4% growth just the month before. Then you've got inflation. Sure, it's still low, but it's starting to creep up. And if you look globally, even the US central bank seems divided on what to do next. And that kind of uncertainty, well, it ripples out and affects everyone.
We can get even more clues by looking at what's happening in global commodity markets, because right now, they are telling two completely different stories.
So, on one hand, you have investors piling into what we call safe haven assets, things like gold and silver. When their prices rise, it's a classic sign that people are getting nervous. But then, on the other hand, the commodities that actually power industry are falling. Crude oil and copper are both down, signaling that global demand is weak. So what does that tell you? It tells you global investors are playing defense.
So for India, this is a real double-edged sword. Let's start with the good news. Cheaper oil is fantastic for India. As a major importer, it lowers the national bills and helps keep inflation in check. But the warning sign here is crystal clear. The whole reason oil is cheap is because the global economy, which is basically India's biggest customer,
might be heading for trouble. So here we are. We've got these totally conflicting signals, right? A roaring Indian stock market on one side and a very nervous global economy on the other. So in the next few weeks, all eyes will be on a few key events to see which one of these stories takes over.
Go ahead and mark your calendars. First up, we've got jobs and inflation data out of the US that will really set the global mood. Then, on January 12th, we get India's own critical inflation report. And all of this data is going to feed directly into the Reserve Bank of India's huge policy meeting in early February. That's when they'll make the final call on those interest rate cuts that the market is so desperately hoping for.
And really, that brings us right back to the crucial point of all this. This incredible, record-setting rally, it's not built on what the economy is doing today, it's built on a foundation of pure hope. The whole narrative, the whole story, it all hinges on one thing. Can the real economy catch up to the market's wild optimism? So that's where we stand. The stock market is throwing a massive party, but the guest of honor, the real economy, is still hesitating at the door. So the big question for 2026 is simple. Will the economy finally join the party? Or will the market have to sober up and face the quiet reality? That right there is the paradox at the very heart of the Indian market today.